Welcome to our new video. Today, we'll be discussing the recent trend in the crypto market worldwide, with a focus on the latest developments. Hong Kong's Cyberport draws over 150 Web3 and crypto firms with government help. Hong Kong's financial secretary has confirmed Cyberport, a digital initiative managed by the Hong Kong government, has attracted over 150 Web3 firms. The government's commitment to promoting innovation is one reason for the initiative's success. With more than 1,900 community enterprises in Cyberport, the Financial Secretary notes that one of the companies in the Cyberport community was licensed by the Securities and Futures Commission last year. Cyberport's financial budget included about $6.3 million for developing third-generation Internet Web3 companies. The government received $200 billion in investments since 2015, and Cyberport will get around $64 million in funding for the Digital Transformation Support Pilot Program to aid small and medium-sized businesses. Hong Kong has emerged as an Asian powerhouse for cryptocurrencies after China outright banned cryptocurrencies. Hong Kong's Securities and Futures Commission recently approved tight regulation of some crypto asset retail trading. Hong Kong is planning to create a legislative framework for stable coins as part of its goal to become a major global cryptocurrency hub. Bein Crypto reported that mainland China may reconsider its crypto ban due to recent regulatory changes and technological improvements in Hong Kong. The region is also soon to join jurisdictions exploring the implementation of a central bank digital currency. Hong Kong government pressures banking giants to accept crypto clients. Hong Kong's central bank has reportedly questioned major banks, including HSBC and Standard Chartered, for not accepting cryptocurrency exchanges as clients. The Hong Kong Monetary Authority, HKMA, held a meeting with the banks in May to ask why they were not taking on crypto exchanges as clients. Less than a month before the meeting, the regulator had issued a circular urging banking institutions to adopt a more ambitious approach to new sectors, such as the crypto market. Hong Kong's central bank specifically called on banks to help cryptocurrency firms, which it calls virtual asset service providers, in gaining access to banking services. Some senior executives at traditional banks were said to be resisting taking on crypto clients. Meanwhile, some lawmakers in Hong Kong welcomed crypto firms, with a member of the Legislative Council inviting Coinbase to establish operations in a more friendly environment. Crypto ATM enterprise Bitcoin Depot makes its entry on Nasdaq via public listing on July 3. In a June 30 announcement, fintech firm GSR2 Meta-Aura Acquisition Corporation, acting as a special-purpose acquisition company, disclosed that its stockholders had approved the merger for Bitcoin Depot. The deal, which was first reported in August 2022, cost a whopping $885 million. This move is expected to provide investors with exposure to Bitcoin Depot's common stock. Bitcoin Depot's founder and CEO, Brandon Mintz, stated that the merger aims to support multiple growth opportunities and promote the adoption of Bitcoin in North America. Starting from July 3, investors will be able to find shares of Bitcoin Depot on the Nasdaq under the ticker symbols BTM and BTMWW for its common stock and public warrants, respectively. However, this big announcement comes at a time when regulatory scrutiny of crypto firms in the United States is increasing. The Securities and Exchange Commission, SEC, has recently filed lawsuits against popular exchanges Binance and Coinbase for alleged unregistered securities offerings. Despite this, investment vehicles providing exposure to crypto assets seem to be on the rise. In fact, in June, investment giant BlackRock applied to list a spot Bitcoin exchange-traded fund. Founded in 2016, Bitcoin Depot has quickly become one of the biggest crypto ATM firms in North America. In fact, it boasts more than 9,130 locations, according to its website. Just last month, another ATM provider, Bitcoin of America, faced setbacks when it had to close operations in Connecticut. The state's Department of Banking claimed the firm didn't have the necessary licensing. Vodafone expands into NFT Space with Cardano Blockchain Collaboration. Telecom giant Vodafone is making headlines in the cryptocurrency world today, as it announces a partnership with blockchain platform Cardano. Vodafone Deutschland, the German arm of Vodafone, will be launching a non-fungible token, NFT, collection on the Cardano blockchain. Patrick Tobler, a developer from NFT infrastructure provider NMKR, recently shared a screenshot from Vodafone's official Slack chat, where the company revealed its plans for the NFT collection. According to the chat, a Vodafone Germany employee stated that they chose Cardano due to its strong community, sustainability, and cross-chain possibilities. This move is significant for two reasons. Firstly, it shines a spotlight on Cardano's capabilities for hosting large-scale projects, potentially attracting more businesses and developers to the platform. Secondly, it showcases Vodafone's confidence in Cardano's technology, which could further strengthen Cardano's ecosystem and ultimately benefit its native cryptocurrency, ADA. Cardano's adoption numbers have been on the rise, with the blockchain adding an average of 2,446 new crypto wallets between June 1 and June 21. With Vodafone's announcement, Cardano's potential for mainstream attention and adoption has significantly increased. Vodafone is the seventh largest telecommunications company in the world, with over 353 million users worldwide, serving more than 30 million in Germany alone. UK crypto, stablecoin rules receive royal assent, passing into law. The United Kingdom takes a major step in regulating the cryptocurrency market. The Financial Services and Markets Act 2023 has classified crypto as a regulated financial activity. In a significant move, King Charles has given his royal assent to a bill that grants regulators the authority to oversee cryptocurrencies and stable coins. This marks the completion of the bill's formal stages, officially making it law. Let's take a closer look at what this means for the financial industry. The Financial Services and Markets Act, now an act following royal assent, includes provisions to bring crypto and stable coins within the scope of regulation. The bill was approved by the Upper Chamber of Parliament last week, and this final step solidifies its implementation. Andrew Griffith says, "This act gives us control of our financial services rulebook after the UK's exit from the EU. It enables us to regulate crypto assets, ensuring their safe adoption within the country." The bill, introduced in July 2022, expands regulators' powers over the financial system, specifically in relation to cryptocurrencies. Through amendments made during parliamentary debates, all crypto activities will now be treated as regulated. Additionally, supervision of crypto promotions will also be enforced. The bill will also subject stable coins to payment rules. The UK's Treasury, Financial Conduct Authority, Bank of England, and the Payment Systems Regulator will soon have the ability to introduce and enforce rules that regulate the cryptocurrency sector. These authorities have been consulting on proposed rules since February, aligning with the government's aim to establish the UK as a crypto hub. Financial Services Minister Andrew Griffith even suggested that specific rules for the crypto sector could be implemented within the next 12 months. It seems the United Kingdom is making strides in regulating the cryptocurrency market and positioning itself as a leader in the industry. And that's it for tonight's news. Thank you for joining us. And we'll see you next time.